Thank you, Mr. Chairman, and Chair Yellen, again, welcome to the committee.
Thank you.
I appreciated your comments a couple weeks ago to the House Financial Services Committee when you discussed GSE reform. At that point, you said that we still have a system that has systemic risk. Reforming Fannie and Freddie is a priority for this committee, and I'd like to ask you to just take a couple of brief moments to discuss the need to bring private capital back into the market.
Well, Senator, I strongly support and would urge the Congress to address the issue of GSE reform. We've gotten a mortgage system that, in a way, in a de facto sense, remains very highly dependent on government backing, and it fails to meet the very important objective of successful securitization without systemic risk. There are a number of different ways in which Congress could proceed with GSE reform depending on your assessment of appropriate priorities, but in my personal view, it's simply very important for Congress to decide explicitly what the role of the government should be in housing finance, and there are a lot of possible choices available. I think in terms of bringing private capital back into the market, we now have a system where almost all mortgages that are being granted in this country have government backing associated with it. And I think to see private capital return in meaningful amounts to the mortgage industry, clarifying the rules of the road, is important. So I would certainly urge Congress to proceed in this area.
Thank you. I agree with you and appreciate your observations at this point. As I stated in my opening statement, I'm very concerned about Dodd-Frank implementation. And I certainly hope that you will clearly communicate with Congress if there are statutory ambiguities or obstacles that prevent the Fed from doing the right thing when promulgating regulations. And in that context, I'd just like to ask if you agree. When Chairman Bernanke was before us last year, I think it was, I asked him this same question. But I'd like to know if you agree with him that the areas of the end users, swaps, push-outs, and reducing the regulatory burden on community banks are areas in which we need additional statutory attention to getting it right.
So the three areas that you mentioned are ones that are high on our list of concerns, areas that we are looking at ourselves. And as we design the Dodd-Frank regulations in all of these areas, we are doing our very best to address in these areas you've mentioned issues that have been raised and that we consider quite appropriate. It makes sense to me that Congress should consider these areas as well. I want to assure you that we will do our best in writing regulations in these areas, however, to address the concerns that have been raised.
Well, thank you, and I appreciate your attention to it. I also believe that you need additional clarification and strength in the statute to do it right, and I hope that we'll be able to provide that from Congress. Next, in numerous hearings last year, it was revealed that we need better international coordination on cross-border issues to ensure that there are no undue interruptions in the financial system. Immediately after the Fed finalized its Section 165 proposal for foreign banking organizations last week, European Commissioner Michel Barnier's office issued a statement that the Fed's rule conflicts with the international standards on cross-border cooperation in bank resolution. What concrete steps are you taking to ensure effective coordination with your foreign counterparts to create a complementary regulatory regime?
Well, cooperation with our counterparts globally has been a core part of our approach to strengthening the financial system and putting in place regulations under Dodd-Frank. So we are very actively engaged through the Financial Stability Board, through the Basel Committee, through the relations we have with insurance regulators, attempting to craft regulations in all areas that are consistent globally and that mesh together as a successful system. In the area of foreign banking organizations, in our rule writing, which we finalized, I guess, week before last on Section 165, we faced important trade-offs. The role of large foreign banking organizations in our capital markets has changed dramatically over the last 20 years. These organizations are among the largest and most systemically important organizations in the U.S. financial system, and we tried to write a set of rules that provide a level playing field for both U.S. organizations and foreign banking organizations doing business in the United States. And the rules that we put in place, I believe, are really quite similar to what our own banking organizations face when they do business abroad. So we have tried to construct a set of rules that preserve the opportunity for cross-border international global capital flows. Branches and agencies of foreign banking organizations can continue to operate without separate capital requirements in the United States, but it was important to put in place a set of rules directed to financial stability of our own markets.